All right. Can you guys, what do you guys see on the screen? The gamma exposure education, BTC chart, and then spot gamma?
Yes,
Yes,
okay.
sir.
Okay. So see, one thing that you guys need to understand here is this session that I'm doing, I don't want to act or sound smart or anything. I may say some things in a way which should be worded differently, right? I'll be very honest with you guys. I've spent many, many months learning this, and I'm just trying to learn this to the core. Like, I just don't want the basic understanding. I want to learn this to like the max. Like the day somebody has this figured out, it can definitely assist in trading. Even if it improves your trading by 10-15%, that's huge, right? So what I mean to say by that is, let's say, for example, throughout historically, if you're hitting 50% of the trades and 50 you don't hit, right? You're 50-50. If learning this stuff can increase this 50 towards 60%, even assist you making good decisions, that's a huge percentage difference. All right. This is huge. Trust me. Right. But for me personally, I think my trading has gone up by before. If I was hitting, let's say I was 65 to 35, for example, 65%, just in the ratio, just realistically, it's not how it is, but just an example. But to illustrate, I've gone from 65 to 85 to 15 in the sense. Okay, so my trading has increased for the better only after learning this stuff, right? That I can tell you guys for sure. I don't know, it may work for some or it may not. It just requires a lot of understanding. And when I study this or follow this during market hours, when the markets go, gamma exposure, understanding the basics of it has definitely helped me a lot. Now you guys need to understand one thing. Gamma exposure that we're going to speak about today. So let's just go here on SPX. So we have some gamma levels here. Just an example. To learn this, to exactly understand what this is, this will require a lot of training, guys, and it requires a lot of practical training. And when this practical training happens, right, during live market hours, right? This is not something you're going to learn by reading or, once you learn how to read, understand it, you also got to apply it to understand, right? It's like learning how to drive a car, but you have to drive the car in order to learn how to drive the car, right? Makes sense? Okay. So same thing here. So you have to practically do it in trading and see how it works, and then eventually pick up on things. Now, first of all, what exactly is gamma exposure? What does it mean? Right? Before we even get there, do you know what a delta is of an option? Right? Do you even know what delta is? Right? Delta obviously is the rate of change on an option on every $1 move up or down. So if delta is, for example, 0.30 and you bought the option at 1, on a $1 move, it'll be $1.30. Okay. And then how does delta change as the stock moves, right? What moves the delta, right? There's something called gamma, right? And what's the gamma? Gamma is the rate of the change on a delta on every point or every dollar move, right? So now we've gone up to $1.30 on the first dollar move. Let's say the stock goes up $2. What's the delta now? Delta, depending on the gamma, let's say gamma is 10 cents. This is now 40 cents. So the next $1 move will go from 1.30 to $1.70. Okay, and so on and so on, right? But our main talk today is of the word gamma. What exactly is gamma? And we're going to be talking about what gamma exposure, right? Gamma exposure, that's what we're going to be speaking about. And if you don't know these basics, I highly suggest you learn the basic Greeks. There are many Greeks are endless. There's so many. The basic ones that most traders talk about is delta, gamma, vega, theta, rho, right? And then there's so many more. Okay, there's so many more. It just keeps going. Okay, but these are the four main that you should know. Today we're going to talk about gamma exposure. Now, I'm not going to go into too much detail. I'll be very honest with you. In very simple terms, I'll go over some things that I learned by visually looking at the gamma exposure and how I look at them to see how it can help me in my trading. Okay. And again, you can learn as much as you want. You can dive as deep as you want to dive into gamma exposure. But this is one of the sources that I've studied pretty well. Is the implied order book. Is in our Discord as well, right? This is not mine, obviously. It's the credit goes to whoever this is. This is, I think, Squeezometrics, if I'm not wrong. Squeeze metrics. So this is theirs, right? This is not mine, but it's a great paper. Now, for example, if we were just to go over this, I promise you, if you go over this, if you read this once or twice, and you're new into options trading, it might not even make any sense to you. Forget making sense. You might even get bored thinking, what the heck am I reading? Okay. But again, if you put the work in, it's going to pay off. And I've proved it live by doing live SPX trading to you guys. Okay. And now this is a lot. Read this once, read it twice, read it 3 times, 4 times, 10 times until you freaking understand what this is. Okay. So gamma exporter, here's the nice little definition. I was going to tell you guys it's the price sensitivity of the derivatives, right? The price change. And those are here, and options dealers delta sensitivity. Okay, so same thing. An option dealers delta sensitivity to changes in the price of the underlying. Now, this statement is huge if you understand. So every 1% move that goes on SPX or SPY, there's certain hedging requirements that are needed from the market makers. Okay, and then obviously we have the ban exporter and so on and so on. But this is the one that we're talking about, the gamma main. Okay, and how this has helped me. I'm only going to teach you guys the basics of what I look at and how I look at them. Okay, and rest you guys can read these sources. You guys can put in all the hours, all the work that you want to put in learning on how to read these things. Okay, this chart is very popular chart. It's a very important chart. I'm not going to go over it. This is, you will read this. It's in our Discord. You will put the, and these charts, what exactly they are, you are going to put the time in to learn all this. Okay, so I will now, this is very good, right? These are their chart squeeze metrics. They give good information on this and how exactly this moves and what caused stocks like AMC, GME, or Triple BY recently to spike. What was the reason these spiked hard in the last recent days, right? Why did this happen? Or in GME, what caused this huge spike back in the days, about 2 years or 1 year ago in 2021, right? What caused this? Why did this happen, right? So if you want to understand all this, gamma exporter, you're at the right place. Well, I'm not going to teach you all that. You can do your research, but I can give you some terms that you can learn on. And then spot gamma, for example, I had their thing open, right? Even them, just very basic under this chart I often post. We'll go over this definitely, what I mean and what I look at. Right? I'll tell you what these long bar sticks are and how exactly they matter. And even them, they try to explain or give some terms on what this stuff is. Right, it's up. I pay almost $300 something because I have the entire subscription for spot gamma, and you guys can see all these charts, what they mean, and how does that, how can this information assist you in your trading. When you have these things available to you, it's up to you to put it to use. Now we have Trading Ticks also in Discord, which is free for everyone to use. And I'm gonna post a video of Trading Ticks right now. So if you guys go on the Discord and you guys look at it, and you guys go into that channel on my the YouTube and under content, I'm posting a nice little YouTube videos by Trading Ticks, and they talk about gamma exporter. I watched the entire video, believe it or not. I watched it twice, and let me know if you guys can see it. And I can also put this link here as well later on. You guys can click on it, watch it after. It has a lot of information because I'm only going to go over the basics of what I speak about on voice chat. Okay, so you guys understand when I say there's negative gamma here, there's positive gamma here, it will make some sense to you guys. Basically, that's what I'll explain, right? Because I myself, like I said, I'm putting in a lot of work trying to understand it to the core so I can eventually start teaching you guys this properly. Okay, but the stuff I speak about, that will go over. Okay, and so spot gamma also has a lot of things. Now let's go back to the basics of things that I want to talk about. All right, and these are the terms that you should also know. What is zero gamma? Zero gamma is where the activity is null by the market maker. Now this gamma levels change every day. This is from Friday. This is when the activity is null. If we were to get here on Friday, right, towards zero gamma, let's say we got here and you were in calls, I would take my profits here. Why? Because dealers' activity is null. And in most cases, this brings volatility back into the markets. Okay, at zero gamma, in most cases, what happens? They sell. All right, they sell. Right. Let's say if the stock is trading above zero gamma, for example, if the stock, just an example, if the stock is trading here and zero gamma is right here, it comes here. If the market maker does not bounce the stock here, because activity is null, if we don't go up here or whatever happens, it does not balance. The selling could be harsh, okay, because more negative gamma will pick up. And if we're trading in the from the bottom tick and we're going towards the call, we're approaching the zero gamma, we trade here, for example, there's a good chance activity will be null, he's likely to sell it off again. Okay, so zero gamma study what this is, this helps a lot. And all these combos, all the words that are here, they're just the big hedging levels where there's a lot of options, open interest, where there's a lot of activity that may happen on every 1% move. Okay, and anyhow, so gamma exposure we went over. I know that the definition might not be clear to many of you guys, right? In order to understand how it's calculated, you take the gamma of the contracts, the options, open interest, you multiply it, and there's a whole formula. In fact, the guy from Traditix, he also explains how to calculate it, or you can just go on Google how to calculate gamma exposure. You will understand exactly what this is. Okay, and gamma exposure basically, you know, if we're approaching, let's say for example, so I'm going to go over, obviously I don't have this in a flow, right? The first time I'm doing the session on gamma exposure, but I will get better and better as I do it more often. But let's say for example, if we're following this chart, for example, this is for today's expiry. Okay, let's pretend like, or you know, we were trading today, or the you know, for current expiration, and this is the chart we're looking at. All right, this is the absolute gamma notional. Many of you don't understand what the y-axis is. This is basically the amount or the hedging activity if SPX moves. For every 1% move on that strike, that's how much you know, the selling that's going to happen here. Okay, so here, for example, 4,000, if the value is, let's say negative 20, just for an example, the dealer might have to sell $20 million worth of the stock on every 1% move, basically. Okay, now let's, for example, let's go over let's go over Apple, for example. If we're trading Apple, I'm going to give you guys one example now on the gamma exposure, how exactly it works. Let's say, for example, when I say, guys, there's a lot of positive gamma on Apple, right? Let's say, for example, if there's the strike is 168. Man, let's say the strike is 170. Let's say the strike is 170, and I tell you guys, for, let's say today's Thursday, because gamma exposure works better for Friday. So I'm going to use Apple as an example for the entire session now. Okay, let's say 168. This is a strike 168, and I'm just going to draw here. There's gamma exposed here, and there's gamma exposed at let's say, for example, 172. Now these strikes, I don't know if Apple has these strikes, but I'm the example. There's some gamma exposed at 172. Then 160, let's say, for example, has doesn't have too much gamma. 164 may have some, right? And then on the negative gamma, I'll use the color red for negative gamma. And for this, I'll use the color red. So red is negative. Let's take black as positive. Okay. So Apple has, let's say, some negative gamma here at 153, right? And then it's got some negative gamma at 148. It's got some at 144, or just an example so you guys understand some here. Now you guys can see tomorrow, if we're going into this, in the morning, this will not be the same. It'll be changed. Let's say by 9:30 a.m., we see that this is Apple's gamma profile. Okay. Right away, you can see that there's a lot of pull at the 168 level. This is positive gamma. All right. You can see that Apple's opening up at 155, but 168 has huge positive gamma. Okay. And there's a very good chance if there's higher activity call, if there's more volume on the call side of the chain, if you guys are watching this, like, you know, on your platform, and you guys are, because this requires a lot of attention watching it. Okay, like it's not easy. There's a lot of that. This gamma shit requires, it's a headache. Trust me. Okay. Now again, what is gamma exposure? One thing that I'm going to tell you guys: don't fully depend on it, please. Do not fully depend on it. Right? Do not fully depend on it. It's just an additional tool. That's all this is. It's nothing but an additional tool to assist. All right, and nothing is guaranteed. That I can tell you guys, right? It's only assistory, it's not guaranteed. But this is a great freaking tool. Personally, I find this to be the best tool out there in the markets. Okay, so do not fully depend on it. It's just an additional tool. That's all. Okay, and you have to recognize the patterns. Now, throughout the day, these bars that I posted on the horizontal, these change. This gamma changes throughout the day. But on the day you pick up the trend, on the day you figure out that, you know what, this gamma increasing to one side. Let's say these bars. Now, guys, I'm not going to change this color. I think it's red for now. So just listen carefully. Keep your ears open. Now, let's say, for example, this 160 gamma also increases more. 164 increases more. and there's 168 increases more, and these decrease. Okay, these actually decrease. Okay, they go down. So this negative gamma goes down, right? It decreases. Now, instead of technically just blindly buying puts because it's that resistance, you now know with this additional tool that, you know what, there's a lot of call buying active. There's a lot of gamma building to the positive side. What does that mean? So every 1% Apple moves up, there's a lot of notional value that the market maker has to buy, all right? Or the market has to hedge, like shares will be bought, okay? Shares will be bought. And so why do you want to short something like that? You shouldn't, right? Until you see that. So how long do you play these calls until when you see these, gamma increasing to one side? Let's say Apple's trading here green, you caught the move, now it's all of a sudden it's up here. But if this gamma is still building higher on a higher strike, out of the money strike is bigger than the in the money strikes, right? In the money strikes, bigger Apple is likely to continue higher. Okay, towards the big hedging activity level. And this is where it's probably going to have the pinning effect or maybe hold around here. Okay, now this is only one scenario I'm discussing. Is this making sense to you guys? I'm basically just here trying to tell you guys how to read these charts, all the facts and everything, what happens, why you guys can read and learn on your own. Okay. So Apple will likely be bought towards these levels. Now, what else can happen here on the gamma? Now, what else can happen here on the gamma, right? Let's say, for example, same scenario, Apple's opening up here. This gamma 168 is still big, 172 is big, right? And the 164 is big. Now, let's say the same similar scenario. Okay, negative gamma is not too much. Negative gamma is not too much. It's very small. It's a little bit. Okay, what's going to happen to Apple? Again, positive. But here, what's going to happen now is, let's say, for example, this gamma starts decreasing. In the morning, Apple is doing something, but you see after 15, 20, you know how I say in the morning, I'm going to wait for half an hour, 15 minutes. You guys know why I say that? Anyone? Does anybody know why I was saying this? Why do I wait for the first half an hour? You guys can unmute yourself if you want. Because I want to see and I want to see which way the profiles are building towards. If the profiles are building stronger to the upside, now I know that there's supportive flows to the upside until it changes. Okay, now I know. And if the gamma starts building more to the negative side, let's say more puts are coming in, right? It's building more to the negative side, and call gamma is going down, right? And the call gamma is going down. These strikes are going down, right? Now I know that there's weakness building into the stock. Eventually, one of the resistance levels is going to fail and get pulled towards those big hedging levels, right? And usually, what happens is, price usually goes towards wherever the biggest hedging is. Okay, wherever the biggest hedging is, that's what it usually gravitates towards sooner or later. Okay, as long as it stays. All right. And now let's say, for example, like I said, so let me draw these same lines again. I'll keep the same scenario, then we'll go over it. Right, 155, negative gamma is not too much. There's more on the positive side. Now I know that, after the first 15-20 minutes, the positive decreased. Right? Even the negative didn't pick up. It's just here. Not much is happening. What's going to happen to the stock? It's just going to chop around. It's going to stay in between its ranges. I'm not even going to bother looking at Apple. I'm going to get the hell out of there, go look for a different stock, which I can see demand to one side. Okay. I can see the gamma being exposed to one side. Okay. And usually when gamma is really positive, let's say, for example, many times you guys will notice that gamma is positive to one side, depending on the broker, whatever charts you guys come up with, or the options interest. Now, these graph lines that I'm drawing, you can also imagine in your head, as per your broker, your own options chain. Okay. On one side could be bigger, one side could be smaller, like the volume and the open interest. Okay. Now, let's say, for example, there's negative gamma 160 is huge, 164 is also huge, and then 155 is huge. There's a lot of 152 gamma. This is when I say it's push and pull. It's going to fluctuate between, right? It's just going to fluctuate between these prices. That's when I say push and pull, because gamma is pretty equal to one side until one side takes over. Then I tell you guys, okay, guys, you know what? What's negative gamma, guys? Negative gamma is when it's under the price, and positive is the up, right? So I hope you guys know that. Negative gamma is when the dealers have to, like, a lot of selling happens in negative gamma. Okay, like there's a lot of volatility. In positive gamma, there's price printing effect and the moves are slower sometimes. But unless there's a gamma squeeze, obviously, which is huge to the upside. And So when I say, guys, negative gamma is trying to build up, that means there's a lot of put flow that's trying to come in, right? There's a lot of put flow that's trying to come in, okay? And then if you guys plot graphs like this, where let's say 148 stands out with the most negative gamma, and these are smaller strike, and the positive gamma is not too much, it's only very little, there's a very good chance Apple is going to gravitate towards this level right here. Okay, now when does this work the best? This gamma on individual stocks works the best on Thursday and Friday. Why? Because it's closer to expiry. Okay, but let's say if we're working on this gamma on Monday, right? And let's say on Monday, and guys, make sure you listen to me because there are a lot of different scenarios that happen here. I'm trying to tell you guys all of them as I'm speaking. Let's say Monday, there's a lot of negative gamma on Apple, 152, 148, everything is huge, right? Positive gamma is not too much. Now you buy puts based on this information. You buy puts on Apple because there's a lot of negative gamma at 152, Apple's trading at 155. You think it's eventually going to gravitate towards 152. Yes, I agree. One thing you need to keep in mind now. Next morning, let's say the gamma comes off. What do I mean by when I say gamma comes off? Negative gamma decreases or comes off. They can easily close these puts and this gamma can decrease. They can easily close these puts and this gamma can decrease. What's that gonna make Apple do? What happens to Apple on this? When puts are closed, what happens?
They
It's
squeeze
gonna
it up.
squeeze. Yeah.
Vanna and Charm were Vanna and Charm rallies happen often. That's when puts lose a lot of time decay and the stock does not move. There's something called Vanna and Charm. There could be squeezes. So when these puts come off, and then obviously Apple starts going up, what do people do? They will start buying some calls. They will start building up some positive gamma. So now the rally is being fueled to upside. And now you're like, what the heck? Like, gamma didn't help me. But you just failed to, you did not recognize the gamma, or you went all in based on one small information, right? So you want to keep these things in mind, right? Make sure you're disciplined with them. If the negative gamma is also increasing on Tuesday, right, and you see the Apple's weak, now you work your technicals in it, you're looking at some demand that's coming on puts. When I say, I want to see put buys, you're looking at SPX indices and whatever it may be, it can assist you in your decision making. Let's say if there's a lot of negative gamma, you're buying calls, right? But you see that there's a lot of put demand, that one wrong decision you were about to take, or most likely that was going to be wrong, you avoided taking that decision. Now you can simply wait until this gamma comes up, you see more call side buildup, and then you can go long and whatnot. By doing this, you have avoided a potentially bad play, which was going to be a bad play, which results in what? No losses in your account and possibly more profits in your account, or protect your account, right? So you don't always have to trade. Now, Dream Team say, okay, that's T. He's saying this SPS gamma was building at 3925, 3900. So here's what happened on Friday, basically, to illustrate exactly what happened on Friday. I'll go on the 15-minute chart. I'll take off these levels. So basically on Friday, what happened? The reason I was waiting for 4035, by the way. Okay. So how did I catch the top here on Friday at 4020? Right? How did I catch the top? And how did I catch the exact bottom in the morning for my play? Do you guys remember those plays that we did on Friday? Right. So basically, the reason I did those plays were because SPX had a lot of negative gamma at 3975. There was a biggest negative gamma at 3975. Usually that's initially market makers will not take it under this unless it's closer to expiry and the day is about to close. But this level was so big, so strong, market makers, they were not going to just break this level. So basically, initially what was going to happen here, it was going to bounce. Okay. Initially, when you hit the biggest gamma strike, it could be positive, negative, doesn't matter. These usually act as support and resistance. All right. If SPX was below and we were pushing the biggest positive gamma profile, it was going to act as resistance. Okay. That's just the way how it works. To learn more, go do the research, learn the math. You guys will know why. Because we cannot quantify exactly what goes on here. Okay. Or how the positions change here by market makers because we don't have the live data. All right. Anyhow, so we caught the bottom based on the data that we had. It was a great, amazing play. We caught it. We rode it up, and there was some gamma at 3990, 4000. I took my profits because I saw maybe it could chop around. So I took my profits early, which was great, right? We nailed the play. What happened after? We went all the way to, now in between, it wasn't clear, right? To me, it wasn't clear. It was kind of balanced out in between. So I was like, no. But what stood out to me was 4020. This is the level, the gamma that stood out to me, that was building a profile. All right, 4020 was building a profile. And before it even happened, I told you guys here that, you know what, guys, I'm gonna wait until 4020 hits. So we went to the positive 4020 gamma. All right, this was positive. We got here, and this initially acted as resistance. It's not just gonna blast through unless there's some super headline or some algos, okay? So 4020 happened, we took our short, we got our move, we're out with profits, all right? And then the one level that was sticking out to me, it wasn't big enough, but it was big. After 4020, the biggest gamma build level was 4035, all right? The biggest level was 4035, which was roughly like this. So I'm like, you know what, now that is the flows below are supported, the flows below were supported of SPX holding, and you guys can see, these are 15-minute candles. We actually held. We held for so long, almost 2 hours here at these levels. All right. And I was still waiting. I'm like, if we get 4035, there's a very good chance once we hit this level that it's going to come back and test the 4020 gamma profile again. And I wanted to catch this 10-15 point move. That did not happen. 4020, basically what happened here, they started taking this gamma off right here. At 12, this did not happen. They took this entire gamma. They started taking the gamma off. When this gamma started coming off, it lost its strength, basically. And then we had this nice little downtrend. What happened on this downtrend when we were here? There wasn't too much negative gamma, but there was something at 3950 that was sticking out. Throughout the entire morning, there was some negative gamma at 3950. All right. There was some gamma at 3950. Okay, you know what? So I don't confuse you guys. I'm going to start doing this. Hold on. So positive gamma, I'll draw it from here, right? 4035. And then let's pretend like this is negative gamma. So 3950 was something that was sticking out to me the most. And that was something that just kept sticking out after 3975. That was the next level that was sticking out. And I just didn't believe it was going to happen, but you know what? It happened. Now T says that we started building gamma at the 3925 and 3900. Basically, what happened there at the late end of the day, right? They started buying up puts here at 3925. They started building put profile right here at the when we were trading around here, right? Now we didn't even wait here, right? They started building a huge negative gamma. They started buying it here. Eventually, it was going to gravitate towards it because the positive everything was weak. It came off. There was not much left here, right? Now the profiles were all negative. And I also mentioned that they were slowly starting to build 3900. And then we eventually gravitated towards 3925. When this happened, this could have easily became a strong support, which it did. But what were they doing? They kept buying 3900 puts. They started building more negative gamma in the 3900s. Eventually, when 3925 broke, we hit 3900. Now, why does all this take place? Why does all this take place? Right? Remember deltas? Because deltas increase closer to expiry. As deltas increase, let's say, for example, we bought the 3950 put, for example. The deltas on this were 0.35 when we bought it. All right. Deltas were 0.35 and we bought, we had 3950 puts. Let's say when SPY was trading around 3970. As it got down, these deltas went to 0.50. Now, what did the market maker have to do? Right? They were selling along. They were selling shares along with it, right? To keep up with our delta. So they had to stay neutral. All right. I'm sorry if my wording is a little bit off here. I could be saying something wrong. I'm not, but just so you guys know, okay? Like, don't come back at me in the comment section or anything once I upload this on YouTube. This guy's saying wrong shit. I'm telling the right stuff, but just double check your own. This is the first time I'm doing this, okay? And just being a little transparent. That 15 additionally has to be sold. As we get closer to expiry, these deltas now probably increase to 0.80 if we're deep in the money. More 30 additional shares have to be sold. Now, also, and now 39 puts. Now we also have 3925 puts being built up and the 3900 puts. All right. Now, when 3900 puts were being built up, because they were out of the money. So let's take 3900, for example, because they were out of the money. Let's say their delta was only 10 cents when I was trading, right? But by the time it got closer to the money, those deltas probably increased to 50. Look at the additional hedging that was required. That's a difference of 400% from initial. And 3920, maybe those deltas were 24 cents, for example, and they probably hit 0.80. Look at the hedging activity that was required by the market makers. So you guys understand, as you get closer to expiry, right, how the highest gamma exposed, how this works. And 3900 was so huge that eventually it became a great support level. And then the 3900 deltas came off When the 3,900 started coming up, because people probably took profits, whatever happened, the biggest pull left was 39.25, and we bounced right back to 39.25, right? We bounced right back to 39.25. And in the, before I left the chat on, because I left a little bit early on Friday, the one thing I told you guys here, just watch the 39.25 break and watch the put demand. That's exactly what I meant by saying that if we break 39.25, those deltas basically, because we're closer to the expiry, they increase. When those deltas increase, why do the deltas increase? Because the gamma gets added to the deltas. And when that additional gamma is added to the delta, that additional selling is required, right? So now as we go lower, the deltas keep increasing and the selling keeps increasing. And as we get closer to 3,900, more selling gets increasing. And this is why they keep slapping it down all the way towards 3,900. Had they built 3,875 and we had more time, then the same thing would have happened from here to here. The same thing would have happened. Make sense? Right? And sometimes when we have trend days, like for example, we have these trend days, for example, these are one of the best days. I watch this like a hawk, basically, right? I don't miss these trend days. I just basically watch the gamma profiles where they're building and how they're holding it through. And this requires a lot of attention. Trust me, this requires super attention, right? And then you see that they keep building the negative gamma profile lower and lower until it stops. You just keep selling every rip. You keep selling every rip, man. And on this day alone, we had 5 SPX plays, if you guys remember, right? And because I just saw the more negative gamma, it just kept building up. And the same thing happens to the upside days. Now, one thing to keep in mind, the market has a lot of negative gamma. There will be some big rips in the markets, right? When the puts come off, there will be some big rips in the market, okay? And that's that. So I covered that part as well. And sometimes when there's positive gamma, when there's a lot of positive gamma, guys, right? When there's a lot of positive gamma and it's not increasing, for example, one strike just sticks out and we're trading around it a little below, that usually causes a pinning effect on SPX and the individual stocks as well. Again, works the best on Friday. Okay. Now you guys can get the gamma exposure for on SPX, they're all for all expiries, obviously. And then for individual stocks, every expiry has a certain gamma exposed. Every expiry has certain gamma exposed, right? And there's also a 3-month total gamma expiry, because what you see for next week's gamma expiry, it might be different than of today. Okay. So on all these profiles that happen, there's a lot of different scenarios that take place. And sometimes you guys will see that the gamma profile is so balanced, right? Like it's the same on both sides. Then all these act as support and resistance. I define this as chop until I see one side is losing momentum. Whatever side loses momentum or strength, or the other side builds it, that side eventually wins, right? And sometimes they'll do crisscross, like one side decreases, one increases, and then they'll decrease that, they'll increase this, right? So those are called the chop days, and you learn just to recognize them until a certain range is broken or until a certain negative gamma profile is built, right? Some days back, I told you guys that Qs have a lot of negative gamma that was built at what day was that, if I'm not wrong? That Qs have a lot of gamma built to the downside. Which day was that? One of these days, I think, I don't remember which day it was, but everything was going fine to the upside. Maybe it was August 11th, or was it? It was one of these days, but I'll take this day as an example. Maybe it was this day. And I told you guys, the market looked super good. Everything was strong, but I told you guys, man, I'm not feeling this, because they were buying 10 points out on puts on Qs. They were building a lot of negative gamma. The other indices, I did not notice anything, but sometimes what they do is they'll, one of them just sticks out. And I told you guys, this is not a good look, because they're building up some crazy gamma. And that day we dropped like 8 points on Qs. Was it this day from 320.30 to 323? It could be this day, I don't remember, right? When everything just looked so good. And what happened after? Boom, the market just fell, right? And we caught that day as well, right? So sometimes these things you guys can pick up, and it works great. Again, before you fully blindly trust this, make sure you guys put a lot of work into it. It took me many months and years to learn this stuff, and I put a lot of work into understanding it. It may sound easy, it may look easy just following it, but it's not that easy. There's many other different factors that come in, right? Like this gamma profile, and our data is delayed 10-15 minutes, but you can just make the best judgment from it. All right. And any questions, something that you guys want to ask? So Andrew, Alex, Cedric, your morning, yeah, 39.75. We don't know, Alex, Tonk, I cannot quantify, like, we don't know the live data. Like, it's just I mean, you can call it a push and a pull kind of thing, but we don't have live data. I don't, right? If we did, obviously I would do wonders. Mine data, the data that I get is 15 minutes delayed, but I do watch options, buy, sells live. That I have live. Sometimes I will see that, on the indices, sometimes all three will line up, right? Everything that I just went over, Positive, negative, gamma, when all three indices line up, SPX, triple Qs, and IWM, and SPY also, that's when the trend is strongest. That's when you want to nail that day. But if only one sticks out, the others are choppy, then you can try that day, go with a smaller size. But there are some days that all three are on the same spot, same side, and we just kill those days. Okay, but if I see IWM building a lot of positive gamma, and then I see Qs building a lot of negative gamma, for me, it's unclear. I don't know which way the market is going to go, because indices are most likely to move in the same direction almost most of the days. Okay, then everything just balances out. Then I just simply don't trade, right? I often tell you guys that it's unclear because I don't know which way the market is going to go, right? And so that but some days all three align to the same side, and then that's the day that you want to catch it, right? And but I do watch options, buy and sells live, guys. So let's say, for example, we're watching here, we're seeing, and then I'll be scanning through options every 1 minute, like I'm going through 10, 15 different options on SPY, IWM, SPX, I'm watching it, and I see something unusual happening. Let's say, for example, it's 2 p.m., for example, and somebody comes in at 1:58 and buys 1,500 contracts of IWM or SPY for the same expiry. I quickly, let's say, for example, they buy put. Let's just say, for example, IWM is trading at 197, and it's like an unclear date to me. At 150, as somebody comes and buys 1,500, 196 puts contracts, right? 1,500. But I have 2 minutes basically to go look at SPY and Qs near the money and see if there's any call buying active, or if it's smaller, right? Or if it's just IWM, or on SPY and Q, there's also put buying evident, right? Then basically, I can see that, negative gamma is built to the downside, and 2 o'clock is usually an algo candle. So the market maker is probably expecting a downside, or they just want to bring the market down for whatever reason, right? So sometimes that I try to teach you guys the live demand, and it works beautifully. My hit rate with this is like 90-95% when this takes place. But again, all this comes to patience, guys. Patience, risk management, and some military style discipline, right? So there's a lot that goes on in the market, and you guys can absolutely nail it, right? And anything else I can answer? And again, let me tell you guys a stat here. Anything basically on gamma exposure, I only covered maybe 1-2% of it. So if you think you learned a lot today, you barely even learned 1-2% of it, right? I myself have a lot to learn, and a lot of the stuff that I just don't know how to explain it to you guys. It's just something that you pick up on your own. I don't know how to explain it. Like, I'll be honest with you guys, you just pick it up on your own as you watch it practically. So you will have to do a lot of practice, that I can tell you, right? But I give you guys some simple things that should assist you or get you started on how this works, right? And I actually wrote a lot of notes on the book. I can even show it to you guys. And I wrote a lot of notes that I want to cover. And I'm not even through the first half, right? But I'll leave it here for now. I think that's the 45 minutes. Wow, I didn't even know. But I hope this was so let's leave this here. Let's practice this tomorrow. Let's see how you guys get into it. And rest, guys, read up on these things. Trust me, you guys want to read up on all this. There's a lot of information out there. This is just one, not this, but you guys can go out there, right? And also you guys can use SPY Gamma Glossary. They have some stuff, but I would not recommend SPY Gamma if you want to learn. I sent you all, and the PDF I'll post in Discord, of course. And just go online. There is some good reading material, but the main learning that will take place is you practically doing it live. That's where you're gonna learn this, like, mainly, right? And yeah, KB, I'll put that in there. I'll upload it. And so I hope that makes sense. I hope even if you picked up one little thing here, congrats, guys. Trust me, it's going to assist you in your trading a lot. it will assist you in your trading a lot, right? And sometimes they just hold the gamma to one side, they just keep increasing it to one side, and you spot that there's not much to one the other side, and all day it's an update trend, and you see that they keep building the profiles higher. It's a very clear trend day, and whatever the profile is being built the most of the strike, that's where they're gonna take the stock to, unless another bigger strike builds on top of it. Okay, and there's a lot to learn. There's a lot to learn. And with that, thank you guys. I'll end this here. I think I'll have to do a lot more sessions, and maybe I'll do one again after a week or so. And I'll talk there because there is some other stuff that I want to talk about regarding gamma exposure. I won't cover it today. With that, I'll finish it. Thank you for attending, and I'll see you guys in the chat tomorrow morning. God bless.
Thank you, Ricky.
Yes, sir.
Thank you, Ricky.
Thank you, Ricky.
Thank you, Ricky.
Good night, guys.